There are some numbers out there that are so big they just don't even feel real. We're talking about a figure that shadows every government, every corporation, and in one way or another, every single one of us. Today, we are diving into the colossal, ever-growing mountain of global debt.
Okay, just take a second and look at that number. $337.7 trillion. As of mid-2024, that's what the entire world owes. It's a number so vast, our brains can't really process it.
So let's try to put it in perspective. Imagine you had a job, and that job was to spend $1 million every single day. Well, it would take you almost 1,000,000 years to get through this pile of debt. This isn't just an accounting figure, it's a force that is actively shaping our world. But this is more than just a big, scary number. It's actually a story, a pattern that we've seen play out again and again, and it often ends badly. This mountain of debt has a nasty habit of causing avalanches. Think about it. In 1982, Mexico defaulted, and it kicked off what was called the lost decade for Latin America. Then you jump to 1997. A currency crisis in Thailand started a domino effect across all of Asia. And of course, the one we all remember, 2008, the U.S. housing market imploded and nearly took the entire global financial system down with it. The point is, these massive debt crises, they're not black swan events. They are a recurring feature of our economy.
So, this $337.7 trillion question, who exactly owes all this money? Let's zoom in a bit and break this number down to see who the biggest borrowers really are.
Now, this might actually surprise you. We hear constantly about government debt and runaway spending, right? But that's only 40% of the total. The real heavyweight in the room, making up a massive 60%, is private debt. That's money owed by corporations and by households. And that's critical to understand because a crisis in the private sector has a funny way of becoming everybody's problem real fast.
And when you look at a map of where this debt lives, it's not spread out evenly at all. In fact, one country stands head and shoulders above the rest. The United States is, without a doubt, the world's champion of debt, holding nearly 40% of the global total. But as we're about to see, they're not the only ones with some serious challenges.
Let's dig into the specifics. For the U.S., here's the scary part. A whopping 80% of its government debt is short-term. That means it constantly has to be refinanced or rolled over, which makes the country incredibly sensitive to any changes in interest rates. Then there's China. The official numbers are high, but they don't tell the whole story. Once you factor in all the private and local government borrowing, their total debt is over 3 times the size of their entire economy. And for emerging markets, they're sitting on record debt levels, with a staggering $3.2 trillion bill coming due by the end of 2025.
Okay, we've been talking about trillions of dollars and entire nations. Let's bring this all the way down from the global stage to something we can all relate to. The debt in our own homes, because this massive issue trickles all the way down to family budgets.
Take a look at India, for example. The numbers here are setting off some serious alarm bells. Between 2019 and 2024, the amount of debt held by families more than doubled, a 102% increase. But the value of the assets those families own, like their homes and savings, that only grew by 48%. You don't have to be a math genius to see that's a dangerous gap, and it's putting families under incredible strain. And this is a global story. In places like Switzerland and Australia, household debt is actually bigger than their entire country's economy for a whole year, mostly driven by mortgages. In the US, it's a cocktail of mortgages, credit card debt, and student loans. And even though India's overall percentage looks lower, its growth is explosive, and it's driven by consumer credit, which often doesn't build any long-term wealth.
For decades, it seemed like governments and central banks had found a cheat code. They could borrow unbelievable amounts of money with very few immediate consequences. But that era might be over. A powerful force, one that's been dormant for years, is back. And they're here to enforce some discipline.
So, when a politician gets on TV and promises massive new spending or huge tax cuts with no clear plan to pay for it, who actually holds them accountable? It's not some international agency. It's not another government. The answer is these guys, the bond vigilantes. Now, they don't wear masks. They're the managers of huge pension funds, insurance companies, and investment firms. The people who control trillions of dollars. And when they think a government spending is getting out of control, they protest with their wallets. They sell that country's bonds, which drives down the price and pushes up interest rates. It's their way of punishing reckless behavior. For about 20 years, with interest rates pinned to the floor by central banks, these vigilantes went quiet.
There was no need for them. But now, in the face of this mountain of debt, they have returned. And as one market analyst put it, they are angry.
And they're already making their power felt. Just look at the UK in 2022. The government announced huge tax cuts without saying how they'd pay for them. The bond market revolted so violently that the Prime Minister was forced to resign in just 49 days. We're seeing similar pressure building now in France and even in the US, where investors are demanding higher and higher interest rates to lend the government money. It's a clear signal their patience is wearing thin.
Okay, I know this all sounds pretty dire, but it's not hopeless. This isn't the first time the world has stared down a massive debt crisis. History actually gives us some clues. And there are some really innovative new ideas that could help us tackle two of the biggest challenges we face at the same time: debt and climate change.
See, back in the 80s and 90s, to solve the Latin American debt crisis, the world created something called Brady bonds. The basic idea was to let countries swap their old, impossible-to-pay loans for new, smaller bonds that were guaranteed by the IMF. It was a creative solution, and it worked. It helped 17 different countries get back on their feet.
So a modern take on that kind of thinking is something called a debt for climate swap. It's a pretty brilliant idea. Here's how it works. A country that's drowning in debt commits to specific green projects, like protecting a rainforest. In return, the lenders agree to forgive a chunk of that country's debt. The nation then uses the money they would have spent on debt payments to fund conservation. The result? A potential win-win. You get less debt and a healthier planet.
You know, when you take a step back and look at this entire picture, the ballooning numbers, the repeated crises, the struggle to find solutions, it's hard not to feel like we're all stuck in some kind of endless loop. It actually brings to mind a famous myth from ancient Greece.
The myth of Sisyphus. He was the king condemned by the gods to an eternal punishment, to push a giant boulder up a hill only to watch it roll all the way back to the bottom, every single time he got near the top. Well, you could say that global debt is our modern-day boulder. We use economic growth to push it up the hill, but just when we think we're getting somewhere, a crisis hits, and it all comes rolling back down.
And today, that boulder is heavier than it has ever been in human history. The cycles of crisis just keep repeating themselves. The IMF has flat out said this is the most dangerous global debt situation since the end of the Second World War. And when you reach a point like this, the problem stops being purely economic, it becomes a moral question.
And that leaves us with the one final urgent question. In a world that seems more fractured and divided every single day, do we, collectively, have the courage and the will to finally stop this boulder from rolling back down on top of us all?